Hello from welcome to Invest. We talk about investing, finance, and professional development. As a recording time of 7:33 a.m. on Eastern Time, Ethereum contracting $2,450, about 4.62% so far. On the crypto market, on the key coins, Bitcoin is down about 2.5%. Ethereum is down about close to two-folds on the percentage perspective in comparisons to Bitcoin. While on the altcoin side of the house, I would say collectively, it's a little bit more severe than obviously the key coins due to its lower price sensitivity, but also more prone to volatility, down on average about, I would say, 15% collectively. And on the equity market, we closed on a relatively down day on Friday. We had that slight normalization in the early days, subsequently slide down as the interest hikes start to percolate towards the end of the closing market. And with respect to Dow Jones, down about 0.2%, Nasdaq down about even more severely, close to 3% at 2.72% mark, and S&P 500 down about 0.30% on the aftermarket hours. What's been driving this overall crypto market and the equity market correction, right? Is a chronological things, and these are relatively sizable macro affectation. So let's just chronologically go through one by one. Despite I was on vacation in France, which is, I have a 6-hour or 7 hours difference in comparison to the folks that are on the East Coast or in your respective regions internationally. So apologies that I couldn't make it, but I was, still watching the news and keeping up to the dates on in terms of the factors, right? It's definitely painful to see, these type of volatility when you're on vacation, but it's important that I'm always being observant and staying focused with respect to how my portfolio is trending. But collectively, I didn't do anything. I've just been holding so far. But I'll dive into the chronological factors of what's happening and what's my tactical maneuver on the upcoming days and weeks for the next steps. So what's been happening, right? So we know that on Monday, MLK was the Martin Luther King holiday. So in terms of the equity market, it was just nothing happened that day, right? Because the market was closed. But that also allows for some normalization for the crypto side, which we saw some green pressure on Monday across the crypto market. An interesting observation that I've seen among the tech sector is that there's a slow rotation going on, shifting to the large cap stocks in the tech space that are more industry agnostic, like Amazon, like Google, like Apple, like the FANG stocks, if you may, away from more of the COVID affected stocks, right? Like Peloton, like obviously Netflix, that we've seen that both of them have corrected relatively sizably, like 20% respectively, with Peloton down, I would say 80% in the last 3 months so far, ever since the earnings call. Obviously, for the reason of delaying their production, but obviously with respect to potential layoff, hiring McKinsey to be restructuring their company, but also at the same time just slow growth on a top line perspective, right? Netflix having similar affectation, right? Slower subscriber growth. Obviously, as we are trying to normalize back to the, normalized economy we were experiencing back in the day before COVID-19, the market has been trying to find ways to adjust the valuation for these respective companies that has been benefit from the COVID macro economy to back to more of an optimized level. So this is something that is understandable why there's a correction, because they have been relatively inflated, right? So this is a negative sign in terms of why we're rotating on a short-term perspective, but it's a positive sign on a long-term perspective, because it needs to happen for us to slowly come back up, right? And that also ties to the interest rate hikes, right? And it seems like it's kind of like a ping pong ball affectation right now. Like the Feds don't know what the hell or how to maneuver. It seems like it's been just trying to correct on an incremental level on a daily basis. It seems like we reach all-time high all over again on Wednesday or Thursday, up to 1.9% on the 10-year Treasury rate. And when that happens, obviously it will drive more negative pressure onto the equity market, which will have a direct correlation to the crypto market as well. And then in addition to that messy macro affectation, which has to deal with more the interest rates, the debt ratios, and obviously with respect to just the normalization in the tech sector side of the house, which is a major driver onto the market. We have also another black swan news coming out from the UK, and this is coming from Boris Johnson, which is the Prime Minister of UK. Seems like he's being grilled by the British Parliament amid the Partygate scandal. Seems like, on a high level perspective, he was caught partying during the pandemic, in his Downing Street office, which, for someone who's an influential figure in the UK government, as a prime minister, obviously, to be partying while not following COVID protocol, it sets a bad example for the UK, and right now he's being grilled for potential impeachment. There might be a potential resignation as well. So when you see this type of political affectation, it's definitely negative onto the entire market, not just specifically for UK, but for globally speaking, right? So and then another one, we have another. This is just like a knockout punch coming from Russia this time. It seems like the Russian central bank has proposed a ban on crypto use, right? And the regulators warns the risk of to financial stability. It's just another word that the Russian government wants to take a stronger control onto the financial system, right? When you deregulate or when you decentralize using cryptocurrencies, it's counterproductive to the existing financial system, which have a direct control from obviously the central government of Russia. And obviously, with this affectation, this negative is comparable to how China has been enforcing a crypto ban as well, on basically banning all the crypto mines from to be mining crypto or Bitcoin or Ethereum respectively, right? And seems like Russia and China are in alignment on proposing this ban. So this is unconfirmed, not non-confirmatory at the moment. And I would say at this moment right now, this is negligible at the moment. This is not something that is fully baked in. And I think the market has been trying to bake it in right now because of the fact that you're seeing the correction in front of us. And also at the same time, the market is trying to adjust for the 4 interest hikes that we've been experiencing, that we are going to be expecting from Jerome Powell in this 2022, and then 2 in 2023, and then another one in 2024. So it's a lot of market adjustments, with high uncertainty because nothing is really confirmatory at the moment, right? So this is something that is still going to be in the back of our minds. They are proposing, Russian central bank did say this specifically on Thursday, right? So we'll see how that goes. We got to keep an eye out on this one, but this is definitely a very negative one. And then the other one that I already talked about is with respect to Netflix earnings. So it seems like, with the negative sentiments from the management team from Netflix, but obviously with Peloton and other tech companies, the valuation has been relatively inflated. So the market is looking for a reason to sell off. And when you see a relatively sizable company like a Netflix, right, which is part of the FANG family, it drags down the entire market, subsequently, conveys some sort of a negative sentiment among the market as well, right? So a lot of negative news. We try to normalize a little bit on Friday morning, but obviously you saw the normalization before in the pre-market perspective, but subsequently slide back down because of the interest rate hikes all over again. So it seems like just consecutive days of negative macro uncertain news that's been percolating, and on top of the fact that it's the weekend affectation, so people are not trying to sweat or cry during the weekend, so they just sell. And I would say collectively, a lot of people have been selling on a loss due to panic sell-off collectively. Okay, and let me just look at some other Ethereum news specifically before I dive into the technicals. And sorry for going for a long duration today. I just want to make sure that we have everything aligned in terms of the chronological factors been baking in. Obviously, it's been negative corrections day-to-day basis, and I just want to make sure that we capture what's been going on so far before I dive into technicals. I'll say collectively, it's a lot of news talk about just historical regurgitation, talk about some of the NFT affectation. I see one news on Bitcoin is 16 hours ago talk about the new NYC mayor. He will keep his promise and convert his first paycheck to Bitcoin Ethereum despite the current volatility that we're seeing right now. And another news that I'm seeing is quite interesting. It's 13 hours ago talk about Ethereum founder Vitalik Buterin. He details how he dumped $6.7 billion in Shiba Inu recently. Interesting affectation, but obviously it's down, so this is relatively stale news. And then the next one is talk about with respect to Ethereum and Bitcoin must hold this critical level of support. Okay, so that's the technical news. So let's just dive straight into the technicals now. With respect to recording time of 7:53 a.m. on the Eastern time, Ethereum could trade $2,488. That's about 3.16% so far. And today is a Saturday, so we know that the news are not going to be as active in comparisons to the weekdays. So right now, what we're seeing right now is just technical speaking the truth. Right now, emotions and uncertainties running all-time high. Panic mode is in full-on session right now. And everything that we're doing right now is basically supported by the technical support level rather than trading on fundamentals anymore. We are extremely oversold at 22 out of 70. We formed a def cross recently, and that's why we're separating. But this is a relatively outlier in terms of the chart. And I think the bottom was basically when we hit the 2,250, right? The level of that we have broke down to is pretty, definitive right here, right? We broke the 2,615, which is the level identified before. And then we crack down to the 2,500, which is a relatively not a substantive level. It's just a flat number, right? It's an easy number to look at, and people put a buy order at that level. But we still crashed further because of both the Russian ban news and also with the tech earnings negative affectation, driving a lot of the stocks to go down, including MicroStrategy, which we've seen that it pretty much tanked because of the Bitcoin negativity, right? So right now we're very oversold, and people are saying like, are we gonna keep going down like to go below 2,000? I would say we have to see, right? But I would say that's very, very difficult because of the fact that we are so oversold, and I don't really believe that we can have that probability go down below the 20 out of 70 because that would incentivize a lot of people to be selling on a loss. So I think right now it's really a battle between the long-term holders versus the short-term holders. So I personally would be holding. I would not really be sweating too much. I would just hold on and wait for this to subside a little bit. I think a lot of the news that we're seeing right now is a lot of uncertainty. It's just a lot of non-confirmatory affectation that's driving this sell-off, especially from the Russian proposed ban news. But beside that, the other ones are just the economy try to go through its normal cadence, right? And I think the interest rate hikes that we're seeing, it's just another, indicator that the Fed is trying to do what it needs to do for us to optimize our U.S. economy to back to normal cadence, like before COVID, right? So this is something that is logical, but the big black sheep news that we still need to be worried about is the Russian ban news. But we've seen this with respect to China, and knowing the fact that China is has a much higher dominance in comparison to Russia, and with respect to the corporate adoptions that we're seeing among the crypto community already, I don't really see the I would give that relatively low probability that crypto is gonna really be banned globally, with the adoptions that we've been seeing so far already. But we have to see because I don't predict the future, nor do I have the control over what corporate and political dynamics would look like going forward, right? but we can only risk mitigate by looking into the technical support levels to risk mitigate from here. And I would say we completely broke through the technical support level. We basically, crashed down below where we need to be at the 3,150 because of all the negative news that we've been seeing so far. So we're no longer trading on fundamentals. We're trading purely on emotions right now based on the market sentiments. And to do that, to risk mitigate, is to use purely technical support to do so. So right now, I would say it's still a buy at the moment, despite how negative it feels like. And I would say to go down to the below 2,000 will be a really relatively sizable stretch, to be honest with you. So hopefully this is helpful. This is my perspective. I know it's definitely worrisome to see such a sizable sell-off, but me, I am holding just as much as you are. So I would just be like me, maybe go on vacation and come back when everything cools back down, or maybe if you have some cash on the side, incur the risk at the moment, because it is logical to do so, and especially if you hold it for a long term. As the storm subsides a bit, it will get better over time. Respect to Bitcoin right now, it cracked to the next level, 34,400, exactly what we talked about. And right now we're very oversold at the 21 out of 70. So extreme oversold. I would say this is like very, very extreme oversold. Obviously, this big red candles just happened on the day when the Russian ban news came out. This simply drive the entire market just freak out. But right now it's like trading purely on technical support. So at the current level, it's a good buy right now for Bitcoin. Dogecoin is down about 7% right now. We crashed to 11 cents, right, at the 31 out of 70. So right now we are basically, let's see, we do have some room to leap down to, I would say, for Dogecoin. I think the Dogecoin, I wouldn't really touch it until we go back to like the 800s because of the fact that we don't really have any support here. We have a little bit, that's why we're kind of consolidating at the current level right now. And then we have a relatively large green candle, which is hard to see because it's so long ago when we were trading back in like April last year. So I would start touching it around like the 800, to be honest with you. Right now it's relatively oversold, like at the 31, obviously below 35. Again, market is not being rational, it's panicking, it's purely on emotions right now. Cardano right now, it's at the $1, so we cracked below $1. Clearly, you could see, right? And as we got below there, we were still relatively at a not the most oversold level in comparison to the other ones. So I would probably still not touch this. I would touch this again when we're at the $1, or when we hit like 95. That's a better level. We still at the 40 out of 70, despite the corrections I've been seeing so far. Solana is we cracked below $1. I mean $100. And the level that we need to get to would be somewhere around, we've cracked 113, and then the next level that we need to go to is 93, right? But I would start touching it, and as we are at 22 right now, I would start touching it at the current level at the moment, because like we cracked below the 113, right? It's 133, 113, and then the next level is 95, right? And you can see clearly as we got to 95, we reversed back up, which is the reason why we see this mini candle, because like 95 was the technical support, right? But we oversold to that point that we hit the 87, and 87 is basically translations to 90. 90 is like a flat number, which subsequently incentivizes people to buy in. So I would say Solana is actually a buy at the moment right now, because we're basically levitating in between levels of 113 to 95 from here. So right now it's like at the optimal level in between. So Solana is actually not a terrible buy at the moment. XRP is at 60 cents right now. We basically are approximating from the 57 cents level. I would say right now it's at the 23 out of 70, so extremely oversold as well. And where's the next support level that we need to get down to? The next support is going to be at the 52. So we do have about 8 cents away from another, if we're going to sell down. And we try to get there halfway at 55 because it's a flat number, right? But I think at the 52, that's the real level. But I would say because of the fact that we're at the 23 already, it's a relatively difficult level for us to get down further. So I would say XRP is still a buy at the moment. Polkadot is down about 13.7%. I would say at the moment right now with the 23 out of 70, very oversold. We were at 16 cents, $16 earlier, which was even more severe. And by then we were basically at like the low like 20s or like 19 out of 70. So you know how extremely oversold that is. Right now we are basically consolidating around the level that we've tested prior, June 23rd all the way to July 13th. So we are at the consolidated level. That's why we're testing right now. But the worst that we can potentially get to would be somewhere around like the $10 for Polkadots. But I think that will be unlikely. But it's possible because we are not like complete oversold like in comparisons to other coins. We're still at the 30 out of 70, but that's possible, right? But right now it's the logical thing to do to dollar cost average a little bit. Algorand's down about 20% right now. We are completely flying off the cliff because of the fact that this is basically all-time low that we're seeing right now. We have a relatively sizable depth cross that we've formed and it's been just selling off. Momentum is really, really negative right now with the 26 out of 70. So, and we bounced from the 80 cents earlier last night. And right now, this is technically the new support level that we formed because this is a new form support that we've never formed before. So Algorand again, right? This is more of your perspective. Do you believe in this long term? If you believe in this long term, then you should incur risk at the moment because like out of all opportunities that we've had in the past, this is the best risk mitigated point at the moment for Algorand at the 25 out of 70, and at the same time we have a huge outlier. So technically we could sell down even more if fundamental doesn't hold, right? But right now nothing fundamentally holds across the market because it's just emotions all over. So right now it's up to your risk aversion. Do you think this is the assets you want to hold for long term? And I would say right now the buy opportunity is at the moment right now. Shiba Inu is at the 2000s, down about 9% so far. You could see that clearly we hit the 1724 as we crashed down. And we levitated in between, right? And the reason that we got to there is because that's the level, right? So firstly is the low 2000s. Secondly is the low 1400s. And then is the 900, which are the respective levels. Right now it's actually not terrible because of the fact that we are at the 25 out of 70. So again, oversold like crazy, just like the rest of them. MacTag is down about, wow, holy Jesus. We crashed down like enormously to the 70 cents. This is a whale has dumped like a majority of their holdings in Polygon, which subsequently translate into this mega sell-off. And the reason we hit to the 70 cents is because we were there before, back in July 20th of 2021. So at the moment we're at the 29 of 70. So Polygon, this looks really, really fishy. This completely broke through the technical supports. This tells me that a lot of whale manipulations are in this one. We did not even test the 143. We did not even test 120, even though there were supports. We test all the way breaking 1, 2, 3, 4, 5, 6 levels straight down because a whale have dumped basically a majority of the holdings. Now it's the 29 out of 70. It's okay, but with this negative activity, we still seeing the head and shoulder that's in play. I would say that's really worrisome for me. But right now, if you talk about like support wise, we are basically rock bottom. So MacTag, if you believe in this, might as well take some risk. If you believe in this long term, obviously. AVAX, similar affectation, but not as severe in comparisons to Polygon. At the moment, right now, 50 is coming. I mean, that's the level that we got to. And do we have a shot of actually going back there? We basically do not, and that's why we come back up to the next level, up to the 61. Immediately got bought up by everybody. And at the moment right now, at the 29 out of 70, this is an okay level, but there's no signs of reversal yet. We're still at the 27 out of 70. So still oversold, but in terms of like, is this the right assets to be buying. It's up to your risk aversion. Do you believe in the long term, right? But technically 50 is the bottom in terms of the technicals. Luna, we're still at the 30 out of 70, so I would not touch this at all. The bottom is technically at the 52 from here. We tried to get there, but we couldn't. We got to like 53.64, and the real bottom is like technically at the 52.35 from here. And in respect to risk management level, you could see that clearly we broke through a lot of the walls that we are in right now, because the market is not trading on fundamentals anymore. It's trading purely on the technical supports. And that's basically just purely based on emotional roller coasters at the moment. So it's definitely not something that we appreciate as analysts, because we are basically at the mercy of the market manipulations and emotional affectations at the moment, right? But ultimately, right now the risk level is a lot more tolerable in comparisons to before. And if you believe in this assets that you're holding for a long term, you'll be just fine. You know what I'm trying to say? And it's ultimately the long-term fundamentals that's going to win out the technical levels that we identified so far, right? So obviously I'm bleeding just as you are. It's definitely not been the most enjoyable vacation that I've had so far. And there's a lot of macro affectation that's stirring up people's emotions. And if you can think logically and you believe in this long-term vision, dollar cost averaging at these moments right now would be the ideal levels, right? So hopefully this is helpful, and let me know if you have any questions. And sorry for the long videos today, but I just want to capture a lot of the things that we have missed so far for the last 4 days so far. I can't believe it's only 4 days, and it's like the world's like falling apart almost. But the market is like that, and for us to think logically is important. So hopefully no one made any irrational decisions based on emotions, but think logically and just hold. Sometimes maybe not doing anything is the best for yourself. All right, appreciate you on this Saturday, and take care.